The disconnect between paper silver and physical silver continues to grow enormously. And while paper silver has been smashed this week and is barely holding $26 an ounce on paper, good luck getting physical silver at any bullion dealer in the US if they have it in stock in terms of coins and bars anywhere near $26 an ounce, because there is serious shortages for bullion dealers here in the US, and also premiums are skyrocketing. They are very, very high, seeing just insane premiums, 20% premiums on some silver items, which are records. And this is also the case for investments like the Sprott Physical Silver Trust, which is PSLV, versus the SLV. Now, recently, the Sprott Physical Silver Trust is gaining on percentage terms versus the SLV, but both have seen enormous capital inflows, and the discount to net asset value, which the Sprott Physical Silver Trust had really mostly since 2017, has gone away. It is now at a slight premium to net asset value. Also, with the Sprott Physical Silver Trust, there are advantages, like you can buy and hold with long-term capital gains. They also have independent audits, so you know the bars are there from the Royal Canadian Mint. The prospectus does not have tons and tons of legal loopholes like the SLV does. So the SLV is a trading vehicle. The SLV can have all different types of silver exposure, silver futures contracts, silver leases, silver swaps, without actually buying physical silver. And yet both have seen enormous amounts of capital inflows. Now, the Sprott Physical Silver Trust has acquired 6 million, a little over 6 million actually, ounces of physical silver recently, as they put out on a tweet, as you can see there on your screen that I put a screenshot of. But the SLV is actually having also enormous amounts of net capital inflows in 2021. So we're barely over a month into 2021, and there has been absolutely enormous net capital inflows into SLV and other paper silver products. My friend James Anderson over at SD Bullion, who I've interviewed about 6 to 8 months ago about all the different paper price manipulation, all the details, and he has estimates of about 150 million or more ounces of paper silver that has been acquired. Now, that is probably not actual physical silver, because good luck buying that much physical silver without drastically driving up the price. I know money managers who tried to buy a ton of physical silver in 2009 when the market was very, very tight, and the COMEX was supposed to have that much, plenty of silver in the warehouses, and it still took 6 months or more for delivery. So I very seriously doubt that many ounces of actual metal were bought. They may have been transferred in title, and now there's multiple counterparty claims on those, as Morgan Stanley got in trouble for with fines, having multiple claims on bars or selling physical silver that customers already owned into the market and then getting fined or sued later. So that may be the case. We may find out about that in the years to come. But normally with that large orders of physical silver, it would drive up the price, and if the disconnect is enormous between the paper price and actually getting the metal, getting your hands on the metal. It is very similar to what happened in 2008, 2009, and towards the beginning of the pandemic. It's probably actually worse in many instances. The final thing I wanted to comment on, so the Sprott Physical Silver Trust, in my opinion, I think is a better buy and hold investment to have silver exposure than the SLV. Now, you still have to own a lot of units to actually take delivery of the physical silver, but the silver is there. So you do have good silver exposure, and that is why the Sprott Physical Silver Trust is gaining, in my opinion, against the SLV. People are starting to do their homework and see that the Sprott Physical Silver Trust is a better instrument for investment in silver than the SLV is. The SLV is good for trading and liquidity purposes, so that's why it normally trades at a premium to the PSLV, because it's more liquid for high frequency trading algorithms and hedge funds and trend traders, because they can move in and out of it. There's more liquidity and more shares traded. But for a lot of different reasons, including tax purposes, the SLV is not as good compared to the Sprott Physical Silver Trust for people who want long-term exposure to silver without actually taking delivery of the metal. Although that's the best way to have exposure to silver is actually take the metal. Normally in the past, I buy silver when there's big smashes in the paper price, but now with the disconnect in the market between actually getting your hands on the metal, if it is available in coins and bars at the retail level, or paying enormous premiums, and then shortages, waiting for paper price smashes and then taking advantage of those when the premiums go down or the prices get better, that's going to probably be more difficult, at least for the not too distant future. So there is a lot of smart money starting to get exposure to silver now, but a lot of it, unfortunately, is paper silver. So the paper silver price smashes will probably not last that much longer if the smart money is starting to move into things like SLV and others. So this paper price smash might not last very long. One last thing, I've gotten a lot of questions both on Twitter and in comment sections below recent silver videos about how the Sprott Physical Silver Trust can source physical metal versus the US Mint. The US Mint is actually run very poorly, very inefficiently, and it is run very similarly like any government agency, more like the Department of Motor Vehicles or DMV. So while the US Mint does produce beautiful American Silver Eagles and other products, they do it very inefficiently. And if you've tracked US Mint production over the years, especially the last like 6 or 7 years, they tend to only really produce for about 9 or 10 months out of the year, if that. So the Mint will often not produce for a good amount of January, and then shortly around Thanksgiving, sometimes even before Thanksgiving, the Mint will shut down. Either they cannot source physical silver, or they just stop to change over and they take the rest of the year off and then restart again sometime in January. And the US Mint has been doing that for a while. Now, a lot of private sector businesses would not do that, would not be able to get away with that, but that is what the US Mint does. The US Mint cannot source, at least unless their bylaws changed or their laws changed for what they're allowed to do, but as far as I know, they haven't changed. The US Mint is not allowed to source physical silver from non-US sources. So they have to buy from US precious metal refineries, or they have to negotiate with miners, and that's it. So the Sprott Physical Silver Trust can buy from the Royal Canadian Mint, they can buy from other sources, and that is how the Sprott Physical Silver Trust is able to buy 6 million or 6.4 million ounces, something like that, of physical silver recently, whereas the US Mint has said for a while now it's had trouble sourcing physical silver because the US Mint is not able to buy all the blanks they need from different sources all over the world, like the Sprott Physical Silver Trust can buy the silver bars from a lot of different sources. So the US Mint is extremely inefficient, as you would expect a bureaucratic government agency to be. So despite the beautiful American Silver Eagles that are produced, they are not produced very efficiently, and the premiums that the Mint charges just to the official buyers, so your wholesalers and your official bullion dealers, are already high. So even more premiums are passed all the way along the supply chain before you, the retail customer, gets to buy a Silver Eagle. So there's all these different markups being added all the way along the supply chain by the time the US Mint starts charging premiums, and then the wholesaler charges premiums, and then the bullion dealer, the retail bullion dealer, charges premiums, and now you see how things are. So hopefully that answers the question of why the Sprott Physical Silver Trust was able to source an enormous amount of physical silver recently, and why the US Mint is having problems. The US Mint is not a very well-run organization, like many federal government and local government agencies.